GM friends, thanks for tuning in to DeFi-Logic's TA Tuesday, live in our Discord every Tuesday at 10 a.m. Mountain Time. Today, we will review charts for Bitcoin, Ethereum, and for legacy markets, S&P 500, Dow Jones, NASDAQ, US dollar, 10-year bonds, and gold. And with that, over to GForce.
Thanks, Pepe. I'm going to go over Bitcoin and Ethereum first. So this is Bitcoin, and I use a daily chart because I think that's the king of charts. I do that not only on crypto, but also on legacy markets. So this is Bitcoin on a daily. You can see today it's broken down past a long time support level we had I had at 65. Yesterday it traded below it and then tagged it, then went back up. And then it did that back here on Friday. So we'll see if this continues lower. It looks like it's walking down the lower 2x band right here. One thing I wanted to point out, in the past, way back in May, it formed a triangle, which is this triangle. And as we know in triangles, that's price compression. So you can see the price get smaller and smaller, especially over that weekend. And then it popped. So the triangle either is a pop or a drop. And this ended up being a pop. It ran back up. But now, at this point of the triangle, it's also formed an M. If you look at this high point here is the first part of a capital M, then the midpoint, and then this point was the second high point of the capital M. And you can see that it never reached the high back here on May 20th. And then it's just fallen back ever since. And the confirmation of that is when you have basically that point on that M, which is the midpoint. When it closes below that, which it did on June 11th, then you expect things to go lower. So right now I'm watching Bitcoin because this 65,500 is a long-term support level or a mid-level. You can see it's gone down below that before, but to me that's an important point where it's either going to come back up or it's just going to continue to walk down the lower 2x band, which I think it's going to. I think it's going to go lower. We're going to move on to Ethereum. Ethereum is not looking good either. You can see that on here, I had this 3,694 level and it is broke it and now it's going back down. I tried to retrace up to the standard deviation line, which was right here at that 36 level. It never made it, and so it's going back down. So it's broke in these lows right here, and I'll draw a quick line here. It's only 2 days though, so that's not much of a confirmation. But it broke those, and today, if it rallies back up like it did on Friday, that's a good sign, possibly more sideways action. But if it doesn't close above that line right there, it's just going to go further down. Don't know what's really driving crypto lower, but that's what's going on at the moment. Now on the legacy markets, I will go to the S&P 500, which is SPX. You can look at the chart here. It just keeps going up. The rumor that we're going to get a rate cut in September before the election has been stronger because the economic news last week was, and also the Fed actually on Wednesday, they paused again. So that's 8 pauses in a row they've done. And that was on this Wednesday right here on the 12th. So right now it's going up because they think they're going to have another rate cut in September right before the election, and then possibly another rate cut at the end of the year in December. So the markets are just taking off because of that. Any kind of economic news that the economy is slowing down, traders are just jumping on it to reinforce their theory that inflation is tamed and we're going to have a soft landing. So moving on to the Dow Jones, you can see we had a gap way back here on May 2nd. And did that gap get filled in? Yes, it did. It got filled in on May 29th and May 30th. So that shows that these gaps get filled in. The Dow, it hit that 40,000 mark, which is the big headline, and then now it's reversed and it's gone down and it's trading below the standard deviation line right here today, and it's probably going to just keep going down. You can also see that the upper band in this area and also in this area is basically they're narrowing. Okay, so when the bands start to narrow, then you expect some sort of pop, but it's going to take a little bit more time for these bands to narrow in. Next, moving on to the dollar index. The dollar index is pulling down a little bit. It had a run up, as you can see. This is a long time line that I've had at 104.15. So it tagged this back here in May 16th, and it's gone that recently, first part of June right here, and then it's popped back up. This 105 level was just that recent high at this point right here. I just feel that the dollar index is going to keep going up. Again, it's an election year. Bonds are starting to slide down, and we'll get to that in a minute on the US 10-year bond. But the dollar index has pulled back a little bit, but this could be explaining why crypto is sliding, because the dollar index is still strong and it looks like it's moving up. Speaking of the bonds, let's move to the US 10-year bond. So since last Wednesday, which is this red candle here, big one, that's where interest rates were paused, and it's just gone down ever since. We're going to look at this. This is what everybody wants to see, is the 10-year yield get less and less. Again, this is a yield, so it's in a percentage basis, and that's why the markets keep moving up, because this 10-year keeps going down. Again, because the federal bank, they pause on their interest rates. They don't want to mess anything up for elections. So right now, they're just sitting on the sidelines, which is what they want to do, and let the markets work themselves out. And the interest rate is at a lower level is exactly what they want and need. So right now, I see this still walking down this lower 2x band. Here you can see that it tried to attempt to get back up to that 4.5% level, which is an important level. On the 10th of June, it tried it again on the 11th of June, and it just has not reached that point. So then it just faded back down. And we can see it going lower as well. And people would like it because they want to get a little bit of reprieve of interest rates, but I don't think it's going to last long. Probably until the election's over, the interest rates will be muted. And then after the election, they'll pop up again. Last but not least is gold. I've covered gold quite a bit, and it's starting to revive a little bit. You can see here, back in May 21st, past the 2400 level. The high was 2433, and then it's faded back since then. It was tagging around the standard deviation level at the end of last month, and then now June 7th was a bad day. It was obviously down dollars in one day. So somebody pushed it back down, probably the Federal Reserve Bank, and then it's trying to work its way back up. So right now it's just trading between the high end of the $2,400 level and the low end of the $2,300 level. With technical analysis, it is okay, what do we do here now? This line, I'm going to stretch it out, okay, at the 2,300 level. And you see the standard deviation line is moving down. So this would also form somewhat of a triangle. It's not a classic triangle, but it's going to come into some price compression. Since it's not a true triangle, it might just work its way above the standard deviation line, which right now is at 2335. But this 2300 looks like it's a hard floor. You can see that back here, it dropped below it back in April 30th and then popped back up since then, and then it's worked its way back down here, below it again on June 7th, and now it's trying to work its way back up. So it's coming into price compression in this area. We'll see what it does, but a huge pop, I don't think. I think it would just work its way back up. But I do feel that the 2300 is a strong floor. Okay, I'll hand it back over to you, Pepe.
Yeah, well, like you said, crypto's bleeding out. Looking at all my wallets, and they're just getting redder and redder every day. But I'm not a good trader, and I know I'm not a good trader, so I am hodling. My wife is at a lesbian bar. Did you know that meme, John?
No, I didn't.
It's a funny one. It's like some drunk guy, and he was like on some message board, and he's like, I am hodling. That's where hodl came from, HODL.
Okay.
Because he's like, I know I misspelled it. I'm one bottle into whiskey, and my wife's out at a lesbian bar, and the price is down bad on Bitcoin, but I am hodling. That's crypto in a nutshell. It's always been like that.
That's funny. That's funny.
All right. Thanks, John. If you enjoy our content, give us a thumbs up and hit the subscribe button for more crypto trading and overall market content. And that is it for this week. Thanks for joining. We will see you next week at 10 a.m. Mountain Time in the server, or for the recording that will be posted on YouTube later on. GN friends.
Join us next week in Discord for TA Tuesday at DeFi-Logic.com.